Abraham, what do I do if the camera is frozen, man? I'll just turn it off for now. All right, hello everyone. Good morning. Appreciate you guys joining me here today. Still getting back into the groove of the stream and stuff. For some reason, camera's acting up, so see if my tech guy can get this straightened out. If not, then we'll just have to do a turn off directly. Yeah, I think I already did that, man. Oh, there we go. Now it's working. All right, lovely. Move this thing forward a little bit. All right, there we go. Good to go. Awesome. Happy Friday, everybody. Glad to be here with you guys. Awesome. All righty. Awesome, guys. Let's do it. Abraham, thanks for the link, sir. All right, guys, let's do it. Time to rock and roll here. Let's get into NASDAQ here. So what my plan for today is, since I'm already done trading for the week, absolutely banked, put on a price action clinic every single day this week. Figured I'd come share the love on YouTube with you guys. So we'll watch the open here together, watch the opening range first 30 minutes, see what it gives. If it's a good session, then maybe we'll stay a little longer. If not, I'll then review the week, cover some trades, and then from there, I'll take any questions you guys have, and then we'll go on into the weekend, and then we'll be back on Sunday to get back to business. So with that being said, guys, let's go and get into it here. Looking at the daily chart here, we're still in a range as we covered. It's still January, so we're still banging around inside this consolidation range here, which is making trading a little more difficult in the sense of looking for sustained price runs. So you just really have to know what you're doing. Get in, get paid. You don't want to overstay your welcome. You don't want to, take 15 trades in a single day, right? Those are all things that are just going to lead to an adverse result, especially in these type of market conditions here. However, I still do favor these relative equal highs here. I think that's just a little too clean, but it's just a matter of when they want to take it up into those levels. So far we've been banging around inside the range, and you can really see how sloppy the price action's been based off how we're trading on the daily chart. There's no inefficiencies, no gaps. The market's not in a hurry to get anywhere, and it's just a lot of overlapping price action. So when you see that, that is usually one of the first, surest indications that you're in a sloppy market. That's more likely to cause you a lot more difficulty. Hey, Vlado. Glad to be here, sir. Samad, what's going on, brother? Good morning, everyone. Glad to be here. Storm, Fiona, Dan, there's SMT all over the place. Yeah, that's another indication as well. Absolutely. Good things to be observing. All right, so we're going into the 9:30 open. Let's drop down to the hourly chart here, see what we got. So midnight opening price here. Let's denote that. Get a lay of the land here. All right. So if we continue to see bullish order flow from here, my attention will be on the buy stops here. So the highs back here. This would be the previous day's high. So Thursday's high would be my draw on liquidity if we remain bullish. And then if we really start to see a lot of ground and speed through that, then my attention would then jump to the high well back here. So that's what I'm looking at on the hourly chart. So far, the order flow is bullish. And on Wednesday, we dropped down. We cleared the stops here. So after clearing the stops, market rallied higher, retraced into a short-term discount. And now it looks like as of right now, it's starting to pump higher. Again, do keep in mind, looking at the 4-hour chart here, we're still very clearly in consolidation here. So you want to be very mindful of where we're at. You want to be very mindful of managing your expectations because we're still in a consolidation market profile. So like I was telling my group yesterday, and if you're not in the free Discord, learning in the free education channel, I don't know what you're doing. Best insights in the trading game are absolutely there. You don't want to blow out before the clean price action comes, right? And this is not the best price action. There's going to be a lot easier trading that's going to be available, and you want to be there and ready to go when that price action is available, right? And that's not it right now. So you're going to be very mindful of that. Don't want to blow out, be in a hurry, and do things that are going to set you up for not an optimal year. And those are some things I'll talk about as well. For those of you guys that are really serious about this, which is the only person I'm talking to, right? Those of you guys that are really trying to make this work, really want to make income from this, or even potentially replace your salary with this. And it's very doable, but you have to do the right things. And I'll get into some of the right things and what that means here after we watch the open here. So look at the 15-minute chart here. It's a turd, right? It's sloppy, back and forth, choppy price action. We have relative equal lows down here. But as of right now, based off how we're trading above this high, I'm going to see if they just want to run it higher. They may not need to upset these lows here, but it is a possibility. And again, we are in a consolidation, so do not bet the farm on anything I say, right? On what I'm saying here today, it is simply commentary. If I liked it, I would be putting my money on it, and I'm not doing so here today. So let's just make that very clear before we get into the lower time frame. Do not over leverage your funded account on the things I'm saying here today, please. All right. So for sell side, we'll note these relative equal lows here. London lows. And we'll drop down to the 1 minute chart. Ooh, that's good. All right, so far this thing's breaking down here. We took out the high of day here. We broke back down into the range. So for right now, I'm looking at the relative equal lows here. That's my drawn liquidity right now, sell side. Now what I would watch is how we trade inside these down close candles here. So we want to see if we respect rollover. Still no fair value gap to work with yet, so still getting a read on this thing. Opening with a nice gap higher this morning. Hey, John, good morning to you, sir. Let's get it, absolutely. Joe, good morning to you, sir. Aslam, welcome back. I'm glad to be here. Glad to be here. So far we're just whipsawing back and forth here so we can go up to a 5 minute chart. And then looking at S&P here on the right. Very interesting. Very interesting. Yeah, markets are pretty heavily decoupled. So still no imbalance to work with, so I'm still neutral here. And the reason I'm neutral is because I can make a case for both sides of the market right now. So looking at the 15 minute chart here, right? I can make a case for this market wanting to run higher and attack the buy stops here, but I can also see the market dropping and attacking the equal lows here. So as of right now, whenever you have that condition in the marketplace where you can see both sides of the market equally, that is one of the surest signs that you just want to be patient, wait, and let the market become obvious to you. Because if you can make a case for both sides, it's not obvious. And then by definition, it's a lower probability market environment. So that's what I'm weighing out here at the present. And so far, the 1 minute is just a lot of back and forth sloppiness. One thing to also keep in mind as well is the economic calendar. I'm pulling it up here on my other screen. We have no high impact news today, and it's in the month of January. So let me see if I can pull that up here. There we go. So Friday, see here, no high impact news. This is why when I'm personally live trading, I'm looking for my setups Tuesday through Thursday, right? When there's high impact news. Today, we don't have any of that. So the expectation or the likelihood of more sloppy price action like this is a lot more likely. When you don't have high impact news, we're in a time of the year where the market's likely to consolidate, and we have the market clearly indicating to us it is in a consolidation range here. So there's a lot more fun streams when the market's moving. It's obvious, easy to see where it's going. But we just don't have that condition in the market right now. Looks like S&P wants higher, so that'll take NASDAQ up with it. Looking at the ES here, 1 minute chart. If we do remain strong, buy side here would be of interest. Too smooth, right? Relative equal highs in the pre-market session. Well, in London, and then this high here is from the pre-market. They drop it lower, so these highs here are of interest. But if you look at how it's delivering here, well, you know, if you see equal highs there, why aren't you long, right? If it's delivering like this, I don't care if I know where the market's going, right? And that's a huge paradigm shift for a lot of you guys, because if I can see that the market's delivering like this and it still gets there, it doesn't matter. A perfect example yesterday, right? Remember we were live yesterday, guys? We were talking about the back to yesterday here real quick. Very important lesson here. All right. So remember we were talking about yesterday, guys, when we were live together in the morning, and I told you guys my draw on liquidity was for these relative equal lows here, right? Like we were looking for that, right? And remember what I told you guys when we were live. We didn't take any trades yesterday, didn't touch this market because of how it delivered. And I gave you guys a masterclass in the education channel, or rather my team did. So thanks so much, on how we were able to anticipate this. It's very easy to see. I mean, you don't have to blow out and shit like this when you know what you're doing. So that is my goal. I'd help you guys with that. But like I was saying, even though I could see there's obviously equal lows there, and that's where the market was going to draw to, I knew that well, let me rephrase that. I had a high degree of confidence, because you never know, that the market was going to trade here, right? And like you'll see here in the PM session, it did, right? But if it's delivering like this, I don't give a flying fuck if I know where this market's going, because this is just going to cause you to blow the ass out of your account if you try to trade a lot in this. So one of the big lessons that I taught yesterday, and on the free side of the Discord as well, is drawn liquidity is just one component to it. The other component is how is the market going to deliver to my drawn liquidity? And that's what most traders don't think about, because they show up at 9:30, they got time in the day, they got money in their account, fuck it, let's roll the dice, baby. And that's just not going to cut it in this business. So hopefully that makes sense. Hopefully that makes sense why I'm also not actively here trading the S&P into the highs, because yes, it's my analysis, yes, I favor it, but with the market structure, the order flow here, it's just nothing telling me that I want to be in here risking capital. But gun to my head though, my analysis is bullish if I had to share one side. Dylan, did you watch everything from ICT's YouTube channel regarding futures mentorship? Every video, multiple times. Your Mac is about to fall asleep soon. All right, let's fix that. Good morning, Dylan. Keep up the good work. Thank you for doing what you're doing here. Much love from South Africa. Appreciate it. Got quite a few South Africans here. Big shout out to you guys. Always showing up strong. So, all right, just plug this in. The camera went off. All right, there we go. All right. So on a day like today, you just want to relax. You just want to relax. You just want to take it easy, right? Every retail trader has had the casino closed for the last 8 hours. The casino's just open, and they think they got to, put down their bets and be in a rush, be in a hurry. And anybody that's put down trades first 10 minutes probably not that happy they've done so, right? So those are things you want to think about. You want to come into the market relaxed, patient, right? Let the obvious setups come to you. And if it's not obvious, just let it go, right? Because there's going to be a lot cleaner price action, right? It's going to be a lot better days. And unfortunately, what a lot of people are doing is, it's the beginning of the year. I have my New Year's resolution that I'm going to make money trading this year and I'm going to create new income for myself. And they're in here pushing in this. And then they're going to walk away at the end of January thinking, oh, trading's a scam. Nobody makes any money. It's like, what are you doing, dude? What are you doing? So very, very important to understand seasonal factors and how that's going to impact price action. That's why if you are being coached, mentored by somebody, it does require a full year, because it does require you seeing all these different ebbs and flows in the market and how the seasonal factors will impact the price action. Keep up the good work. Thank you, sir. Absolutely. Yeah, ICT makes you work for it, man. He makes you work for it. You can't just watch a video once. You got to watch them all, and you got to watch them multiple times, because he sprinkled all the goods all over the place. Good old ICT. Ferdy, how are you doing, Dylan? I'm doing fantastic. Doing fantastic. Had some time here this Friday, so I figured I'd come on here live with you guys, hang out. Life is amazing. Life is amazing. I'd hit the weight room after this, and then work with my one-on-one guys, and then enjoy the weekend. My lady's birthday, so we'll be doing something fun. Going out to a rainforest reserve, so that'll be fun. And that's my plans here for this weekend. So I'll be here streaming with you guys for an hour. I wanted to watch the opening range with you guys, hopefully save you guys from some carnage. And we'll watch the carnage together, take a few questions, and get going. So I'm doing fantastic. All right, Dylan, can you explain breaker blocks? I've seen a few traders called failed order blocks breakers, but does there have to be a liquidity sweep prior? Yeah, great question. Absolutely. Yes, there does. Let me find an example here. All right, so this thing's starting to break. It rallied above the high, tried once more, tried again, breaking down below the low here. I'm watching these candles here. Oh, yeah. So to answer your question, yep, here's the breaker. So I'm watching this breaker here. I want to see if this can repel price lower. So I want to see if we can stay below this. Let me make this red here. And then if we do sell off from here, then I would want to see it run for those relative equal lows that we outlined here. But we have to stay below these consecutive down close candles, which so far we are. Yeah, so the breaker is a high. It's a higher high, or a bearish breaker. I'll share a bullish breaker, and then we shift market structure below the low that took liquidity. So it does have to take liquidity, and then it'll come back, retest the breaker, break down, right? So what the breaker is the breaker is the last down close candle here, right? Before the run higher. So now look at it in price action here. We have a high, we have a higher high that runs out the liquidity. So then you go in that price leg and you find the lowest down close candle. That's your breaker. You extend that through, and then it'll perform like this if it's a clean market. So breaker's a high, higher high that runs out liquidity. Find the lowest down close candle. A bullish breaker is just going to be the inverse of that. I traded a breaker with you guys a couple days ago, or I think it was last week. Where's this thing at here? Ah, here it is. Perfect. Yeah. So now here's an example of a bullish breaker. We have a low here, right? A lower low here. So the highest up close candle in that price swing is going to be the down close candle here, or sorry, the up close candle here, and that's going to be a bullish breaker. So we'll make that blue. So low, lower low, highest up close candle before the run on liquidity. Extend that through. That's your bullish breaker, and we traded that live with the group as well. Easy money into the relative equal highs. So hopefully that makes sense on breaker blocks. Okay. So you'll see we closed below it. Market open, traded back up into the breaker block, but you'll see it hit the 50%. Couldn't get above 50%. Working lower. Sell side here in the crosshairs. Textbook breaker. Let me see. Yeah, so hopefully that makes sense, Fiona. Good to see you back doing lives on YouTube. Yeah, well, like I've told you guys before, you know, I'm a trader first and a streamer second. So once I get my bank, I get what I'm looking for, and I deliver for my mentorship group, and I have extra time. I love coming on here live with you guys and hanging out. So, you know, this is shit I'd be doing every day anyway. If I wasn't here live with you guys, I'd just be here watching the market myself anyway. So figured I'd come on here live with you guys, share some insights, and maybe learn a thing or two. Williams, if any mentor has told you that you need the 2023 mentorship is talking BS, you need more knowledge than what the. Oh yeah, absolutely, Williams. Yeah, 100%. So what Williams is saying is if you just there's some people that say just watch 2022 mentorship, don't watch the other things. It just depends on how good you want to be, right? Because someone can teach you how to trade, right? But how good do you want to know how to trade, right? Just like you can take dancing lessons, right? And you can take dancing lessons for a year, but how good of a dancer do you want to be, right? How good of a trader do you want to be? So it really just depends on that. If you just want a simple model, know what you're looking for, it's very easy and it's rule based. I mean, then sure. I mean, just looking at 2022 model can work. But if you want to know and you want to do this at a high level and really know what you're doing, why you're doing it, then it will require a bit more than just one playlist of 40 videos. All right, so we're trading back up here into that bearish breaker here. We'd like to see it repel price lower if it's still going to be good into the sell stops. What I don't like as much right now, I'm looking at S&P. I don't like how it's decoupling. I don't like how the NASDAQ's trying to trade lower to the sell stops I gave you. And the ES is showing strength. I don't really like to see that. It's just indicating it's a trash market condition. But it doesn't mean obviously you can't sort it out. Off the breaker here. Let's give him about 30 points. Yeah, this thing should flush into the lows. It's weak. So the other key level here inside that breaker, you'll notice here what it traded up into is the fair value gap here. Right. So when you have a fair value gap and a breaker overlapping, very, very powerful combination. Right. I'm not worried about this here. This is just all back and forth manipulation. I'm looking at this breaker here, extend that through, and you have a fair value gap here. So you see how it trades up, hits the fair value gap, and breaker stays in the lower half. And I gave you sell side down here. All right, so we got the macro window here coming in about a minute and a half. So that should go ahead and deliver the rundown into here as well. The other thing that also lends well for the market wanting to trade lower is you can see we're working into the opening range gap as well. So the gap higher from where we settled yesterday, you can see we're digging down into that here. So what I would look for, what you want to do is you want to measure these ranges, right? And then you see we have the 0.5 here. Let's make that bigger here. There we go. And right. So the high of the gap, upper quadrant delivered, and we have 50% here. So 50% would be like the next draw. So let me just take all that off except the 50% here. We'll just stay with that. Right. So it's not just the liquidity aspect. That's just one, right? And the liquidity aspect is the sell side here. All right, so because of the day, because it's Friday, make sure you guys are getting paid here if you're trading. And I know some of you guys are trading it. I already know it. So get paid here. It might not get down to the lows. Take something off. Relative equal lows here, but then we also have the mid gap there. So there's two things in my mind pulling price down into that level. Always love getting the question, well, Dylan, why aren't you trading it? Guys, this isn't the last setup I'm going to see. So as we ran out a new lower low here, that would be a good partial, right? Because it's a day that's likely to be more sloppy. The S&P is just delivering like trash here. If it gives you opportunity to pay yourself, do it, right? So we traded below, made a new lower low here. We attacked this low here. So we didn't get down to the ultimate low that we were looking for, but we did attack a measure of sell side. So that's enough to find profitability in this setup because it's already offered 30 handles. And you wouldn't have been risking any more than 15, 20. Yeah, so yeah, well, to answer your question, yeah, it really depends, I guess, on how far you want to go with it, right? If you really want to know everything that, the guy's willing to teach and what ICT's willing to offer, then you definitely want to go through it all. Because like he says, he doesn't, he makes it hard on the lazy folks. We'll say that. Been drinking more teas in the morning, less espressos. Feeling good, feeling good. All right, so you can see we dropped down, took out the lower low. We retraced higher back into this up close candle. So that's acting as a bearish order block, repelling price lower. So basic institutional order flow, which I also taught on my YouTube channel as well. We have a gap here. It's hitting it. It's supporting price. Up close candle here, hitting it, supporting price. Up close candle, hitting it. Or sorry, not supporting, resisting price. Sorry. I have my retail terms all mixed up. It's acting as resistance, right? So resistance, which is what you want to see to trust that the move is likely to continue in the underlying direction that you're looking for, which again, we're looking for the sell stops down here. And as far as the mid gap down here, which is that big, thick dash line. All right, so this wick that we're trading in right now, I want to see that stay in the lower half here. So preferably this wick here, that half level, I'd want to see it stay in the lower half. So it's okay for this 1 minute candle to open, trade higher, shoot up into it like that, but it needs to quickly shoot lower and repel into the sell side. So just like that, you want to see it stay in the lower half of the wick, see that premium sensitivity, and you want to see it dive lower into the sell stops. Oh, my day's textbook breaker at 747. Ah, yeah. Yep, low, lower, low. Yep. All right, just a little bit more. All right, first sell side tagged here. So that would be another partial for you if you shorted off the breaker and the fair value gap here. So Fiona, look, live example of a breaker block. Who's doing it like this, baby? And then next draw here would be the sell side, and then the 0.5 of that gap here. Again, you would take partials at all these levels just because of the day. Yeah, it's Friday. I'm not trading too, bro. Had a good week already. Absolutely nothing wrong with it, man. Fridays, if you're paid, best to just leave good enough alone. Plenty more setups, good price action to come, and especially as we start going into February. And the big thing is just leaving this range, right? Leaving this range here on the daily chart will create a lot better price action here. Yep, you have a great weekend too, man. And do you only consider the bodies and ignore the wicks? Yeah, so because there's large wicks here, I'm using the bodies here. I would use the bodies. So there's that second sell side liquidity pool, smoked. And now let's see if they got a little more in the tank, get this thing down into the mid gap here. But this would have 80% of the position off. So if any of you guys were short here, you should definitely be out here. And if you're tape reading it, like you'd be content with that right there. Just the obvious running the sell stops. One setup for life. Buy side taken. The sell side. Every day like clockwork. Dylan, one setup for life isn't there. I'm not seeing it. They patched it. You guys are funny. Hey Dylan, can you clarify the rejection block again? I haven't touched on rejection blocks at all here. I was just talking about the breaker blocks. Rejection block would just be the highest close. All right, and there's the mid gap. Lovely. So nice little price run there. So first 30 minutes of trading, this is what I'm doing. So if you guys are wondering, Dylan, what does your trading routine look like? What are you doing? This is what I'm doing. And I do this live every day on Zoom. Bank, get out, keep it moving, and it's just easy money when you know what you're doing. So sell side here, let's go up to the regular trading hours gap here. And you can see the market's digging deeper into that gap here. If you are trading futures and you are not paying attention to the, what's going on with the camera here? Man, I need me an IT team. All right, let me see if that's better. One second, I'll get back to what I was saying here. It's from cameras fucked up. All right, there we go. Finally. All right, so good question. All right, so yeah, opening range gap here. We see that delivering. So for futures traders, if you're trading the futures market in any market, you have to be aware of this gap here. Because think of how many traders just don't have any awareness of these reference points here. And they're just completely lost. So you always want to be mindful of that opening range gap that forms on the 9:30 open. Just key intel that most people are just leaving on the table. And then now some of you guys maybe also asking, Dylan, why that fair value gap? Why is that one important to you? It's the first one. It's the first presented fair value gap here in the opening range. So this is all I'm doing in my trading. It's very, very simple. Short, bank, rinse and repeat. So all this it's delivering would be extra. If I was doing anything today, I would be out here at the 50% here. And you also see it's also nice that 50% also overlaps with liquidity back here. So take it higher, put retail long on the breakout, sink it. So all the orb guys, orbs long here, getting fucking smoked. So it looks like the 940 is the first one. Yeah, good question. So yes, 940 here. I would not use this candle though. This one here is a more prominent fair value gap. This one here is a lot smaller. This one's bigger. So this is not first presenting fair value gap. If you use this one as the first presenting fair value gap, that would not have yielded a good result because it would have even got to it because this level here isn't significant. It's this one here because it's a bigger displacement and this candle is trading through a swing low. So the fact that this displacement is occurring through a swing low makes this the key first presented fair value gap. So you got to pick the right gaps if you want results like this here. where you get the turning points, the low drawdown entries. Right? Great question. Can you talk about entries and stop placements? Yeah, absolutely. So let's say you knew the breaker, or you had an indication that the breaker was going to send price lower. How would you enter on it? Well, there's two ways, right? You could enter. You could just enter on the breaker itself, right? So as we close below it here, right? You could just sell here in the breaker, put the stop at the high, right? And then target the levels I gave you guys down here, right? For a nice 3-to-1. Taking it one step further, what I would do is I would use the breaker and the fair value gap. So I would look to take a limit order inside that fair value gap here and breaker, and then like stop here, and then this would be how I would personally have managed it. Entry here, stop above the high, because it's not going to get above the breaker if it's bearish, like I told you guys when we were here. So you see how like that's logic, it's consistent, it's repeatable, it's a consistent entry, it's a consistent stop placement, and it's the same shit that you're doing every single day. So it doesn't change. And that's what gives you confidence in what you're doing, because if you're doing the same things every day, every week, the amount of confidence it gives you is astronomical. Because when you see the same things all the time, it's just like a book you've read many times before. And it's a really good book. All right, so I'm gonna be on here a few more minutes with you guys. My phone's got about 3%. So when the phone dies, that's my cue to get on over to the gym and enjoy the rest of my weekend. John, yeah, so when you think the 1 minute time frame is going to be choppy and you have a strong drawn liquidity like today, do you use a larger time frame to place a trade? Good question. It depends on your strategy, right, and your style of trading, right? That's why trading is an individual sport, because what resonates with somebody might not resonate with somebody else, right? So hold on one second. I'll get back to the question here. So it looks like they're going to give us a full fill of the gap here. So mid gap is always the initial draw, right? Like initially, you're always looking for mid gap, but then you have to assess, how do we trade at mid gap? Well, we sunk through it, so it's reasonable. Put the rest back on here. That is going to reach for what? Lower quadrant. And then you assess, okay, well, how do we trade a lower quadrant? It's slicing down through it. So now I'm expecting this thing to get down to the settlement price. So that's how you read order flow. So you watch it candle by candle. How's it behaving? And it's telling you it's weak, it's heavy. This gap here is a breakaway gap. More breakaway gaps in here, signaling it's heavy. So you just look for levels below market price that it's going to reach for. Easy money. Easy money. All right, so to answer the question, yes. So if you expect lower time frame to be choppy, you have a strong draw, would you enter on the higher time frame? It really just depends on your style. Me personally, no, I would not. My personality is, you've seen me trading for just the last 2 weeks, John. So I'm looking for trades like this, and I want to get paid in 10 minutes. Like I want to be in, and I want to make a monthly salary in 10 minutes of trading. That's what I'm looking to do personally. If I can't get that, then I'll wait for the PM session. Right? Asia, London, pre-market, all those opportunities. So what I personally won't say, well, you know what, it might be choppy, so I'm just gonna take a higher time frame trade just so I can get some action. Personally, that's not what I would do. Can you do that? Absolutely. So it's not to say it's wrong. It just doesn't align with my personality, because I don't like to trade like that. I like trades like this, like you guys see me doing every week with you guys. Get in, get paid, done. Now, if you expect a high resistance liquidity run or sloppy market structure, but you have a strong indication that the market's going to go in one direction, then you absolutely can do that, right? You can say, okay, this last up close candle on a 5-minute chart, we're hitting it here. I'm going to sell that as a bearish order block. And then you would just have a bit of a wider stop above the order block, but you can still trade it like that. So that's why you'll see, John, throughout our time working together going forward, it all works, right? Because what you're also going to learn is, right, I talked about how that was a bearish breaker on the lower time frame. Every lower time frame breaker is a higher time frame order block. So price is fractal. So if I know that's a breaker here on a 1-minute chart, I know I have a 5-minute bearish order block here. So price is fractal, price is price. All the time frames are the same. So you're just going to trade whichever one resonates with you. And if a 5-minute chart is where you can get in and place your stop loss to where you're looking to go, there's absolutely nothing wrong with that. Just because I don't like to trade that way doesn't mean there's anything wrong with it at all. 5-minute charts make money, 15-minute charts, hourly charts, they all make bank, as long as you know what you're doing. Excellent question, sir. What is the point of making each PD array in both sides. I'm not sure what your question is, bro. Yeah, Mustafa, you're gonna have to ask that one again, my man. Yeah, so would you say the top of the breaker is a safe stop, or can we sometimes trade up into the high and push lower? Yeah, so for breaker blocks, you want the stop to at least be at the high of it. So for stop placement, let's say you took the entry on the breaker. Well, I guess it just depends on like how far your understanding is along in price action, right? So that is also a big factor as well. When you're newer, having a stop like this is going to be super scary because you're going to see it here, you're going to see it here, and you're going to be panicking. So when you first start trading, there's nothing wrong with having a wider stop. You just got to use less leverage as you grow as a trader and as you get better. And you can still get, a good 1 to 1.5, 1 to 2 with a wider stop like this. So initially, like when I first started, I wasn't trading with razor tight stops. I just wasn't doing it because you have to graduate into your understanding, right? Until I saw the market deliver like this for weeks, months, and years, I wasn't able to trust it, right? Because you got to think, right? If you're using this fair value gap here as your entry, right? The fair value gap with the breaker, and the stop goes above the fair value gap high. When I first started trading, I had to have my stop up here or up here above the body. Now I can enter on this gap and have my stop right above the gap. But that was a graduated growing process for me, right? Because you got to think, if I'm taking entry here, when you're first starting, you don't know if it's going to get to the high of that. And it's going to be very stressful. So you have to graduate into your understanding of being able to, okay, I can reduce the stop now because I've seen 80% of the time when I enter on the fair value gap candle, it doesn't get above candle number 2 of the fair value gap. So when you see that over time, weeks, months, years, your confidence starts to grow. And I was like, okay, well, I don't need to have a stop up here. I can just place my stop above the gap high because I trust statistically that it won't get up there. But unless I've done that conditioning, that study, the seeing it for months and years, like I'm not placing my stop here on the first day. No way, right? Because this is my finances that I'm putting here. Like I'm not gonna, bullshit it and just, try to make something happen. You got to really know what you're doing and why you're doing it, because trading is very serious. You can make a lot of money in this, but it can also send you straight to the poorhouse. So you got to really know what you're doing and why you're doing it. So first things first, you can have a wider stop, but the logic is you can have to stop right above the breaker because it can trade to the high of the breaker, but you don't want to see it like violate it. And if you just look at this example here, the example I showed you from last week that I traded live with the team, you want to collect those journal logs and like study it. And then every journal log you get going forward, right? Every day is a new backtesting opportunity. And then from there, you're going to collect your own journal logs and see, wow, it really does what that guy said. And it's very consistent. And then you'll have that confidence to take the entries, place the stop, and know why you're doing it. And at the end of the day, that is the legwork that is on the trader, right? Because it's one thing for me to say, yeah, look, you can just place a stop here, but that's not enough. You have to see it. You have to have the confidence in it. And that's only comes from doing the work, getting the repetitions, knowing what you're looking for, and studying price action like I'm showing you here, right? This is what I do every single week with those I work with, because if you want to learn how to do this well, you have to first learn how to read price action well. Because if you're just here lost in the candlesticks, you're making zero money. But then once you understand what the candlesticks are telling you, then it's really easy to know what you're doing. And then once you master yourself, then trading becomes really fun, because now it's not just you wrestling yourself constantly. You can actually have a lot of fun trading, and it's very enjoyable when you know what you're doing. With ES delivery, it's hard to trust if it's going to continue lower on NASDAQ. Yeah, absolutely. Yeah, the S&P being sloppy in here was definitely not ideal. But if you just read the order flow in NASDAQ, it was tipping its hand that it was weak. Fair value gap, hit it, couldn't get into the upper half. So that's going to be what? Elevator ride lower. Elevator ride lower into retail rig sell stop. Lovely. Right, the guy just read the book off the internet this weekend. He's going to trade his double bottom. Oh, that's nice, double bottom. We're in at 930. Whoop, whoop. And then they run it against him. 945 wick on MNQ. Let me see. Oh, yeah, brutal. They did that last year. I saw that where they would just have these nasty wicks on the micro contracts. Yeah. But the good thing is, even if you were trading the micro contract and not the mini, you'll still see, even with the gap, it still did what's permissible, trade to the high of it. But if I had my stop above the high, it wouldn't have got there. Would have got close, right? The people watching me trade would have been like, wow, man, that got really close. But I wouldn't be sweating it. And if it hits it, then it hits it. And just take the reentry on the next breakdown. It's no big deal. Yeah, those wicks on the micros, man, nasty. They were doing that a lot last year. A lot of my guys that traded the micro contracts were telling me about it. Just brutal, man. You're in a good trade, and then they just do these nasty wicks. But good thing is it was right to a very controlled level, right up the first presented gap. Should not go any higher. Also traded to the high of the breaker as well. So to answer your question about the breaker and the stop placement, even with what I gave you here, that it still would have been safe. Still would have been protected because it didn't violate the breaker. Because the breaker is one of your strongest PD arrays before first presentation gap. First presentation gap is the strongest, but then the breaker is a very, very formidable PD array. Lyndon, today's price action is a valuable lesson we are learning. Thank you. Thank you. Appreciate the feedback. Glad it's helpful. Glad it's helpful. These are things that you guys want to be doing every day as well, right? So for you guys that are looking to make 2026 your year in terms of finally cracking into profitability, doing this consistently, you want to be doing this every single day. Every single day you should be on these charts doing these exercises here. Those that work with me directly, well, we do it together 3 days a week. But if you're not working with somebody, you definitely want to be doing this at least on your own. It might take you longer to reach these conclusions, but at least you're going to be getting the reps, doing the right things. That's how I did it. Williams, the high of the morning is just 1 point from the upper quadrant of the daily wick. Yeah, a lot of key levels in price action. But it is, especially when you're starting to see the precision, right? And you can see like, wow, we made the high of the day yesterday at the weekly opening price. Oh my gosh, that's crazy. Or today, we made the high at, because it's exciting being able to see where the highs and the lows are forming, why it's forming there. Because just most traders just have no idea. And to be able to have a clue is just phenomenal. It's better eating on this side, I'll say that, right? Dylan, do you get separate price for live stream or is it just mentorship? Yeah, I just do mentoring. I just do mentoring. I don't do signals. I don't do like copy my trades. I don't like dealing with that at all. That's just stress I don't need. And it's a lot easier for me to trade, make my own bank, and coach others to do the same. So that's all I do. Frank, good morning to you, sir. But live trading is part of mentoring, right? Because how the hell are you going to get mentored by somebody if they can't explain how the market should behave, what it should do, where it should turn, and where it's going to go, and how fast it should get there? Right? If someone can't do that, then that's not mentoring. That is a bullshit artist, right? So live trading is a part of mentorship, but I don't offer it separately. Because by itself, live trading doesn't help you, right? Like even if you watch me do this every single day, you may feel like you're learning, you may feel like it's very productive, but there's a lot of other parts of the mentorship that takes traders to a level that they need to be at to be profitable. And I'll talk about some of those things here. The first thing you have to do is learn how to read price action. Again, before you know how to read price, nothing else matters, right? People say psychology. Well, if you don't know how to read market structure and order flow and price action, psychology is just not a factor, right? Because of course you have terrible psychology, you don't know what you're doing. But once you learn how to read price action, the next step is you need to develop a model. Well, what's a model? Well, something simple like, okay, if I'm bearish, I'm going to wait for a run on buy side, wait for a shift in market structure, short the fair value gap, and then I'm going to take profit at the lows. And the stop goes above the gap. Simple model, right? Learn how to read price, develop your model, and then you need to develop a trading plan, right? Which is what gives you your goals, like what are you trying to reach for, your risk management, your trade frequency, days you trade, days you don't trade, what pulls the plug on it, what's your daily loss limit. All those things have to be defined in the trading plan. Then you learn how to read price, you develop your model, you build your trading plan. Then you need a system for journaling and backtesting every day. Every day, no excuses. You have to be in the charts looking at these things. Looking at it live is good, but you have to come back at the end of the day and look at it again, study it, right? Because if you want to get good at this, it's going to require effort. And you need to have a system for journaling and backtesting. If you are not actively working towards or doing those last 4 things, you will never reach consistent profitability in the markets, guaranteed. And I say that because I know it's the beginning of the year. A lot of you guys are really trying to start off on the right foot, and I want to help you do that. But you're not going to get the result you want if you're not doing the right shit. And I needed a wake up call when I first started because I was doing a lot of dumb shit when I first started. And it was not working towards the right things. And what it ended up doing was adding months and years onto my success by doing all this stupid shit. So it's my goal to help save you guys that wasted time, the wasted years of just doing all the nonsense that, has traders taking 5 years, 10 years. Some traders I work with 20 plus years trying to crack into profitability. And it doesn't have to be like that, but you have to do the right things. Can you summarize the model? Yeah. So there's lots of models. Yeah, absolutely. So let's say I'll go into the different models that formed here, right? Let's say you don't know what a breaker is. That's fine. What do we have here? We have a run on the highs here at 9:30. So there's a likelihood that that's going to be a manipulation run. And then we have equal lows here as a draw. So now the model could be, right? A lot of different forms of the model. Breakdown, right? A displacement, trading through a swing low. That's a shift in market structure. With a fair value gap, short the gap, put the stop at the high, ride it down into liquidity. If you have a little more visibility and you can see that, okay, well, there's also a breaker block here, and that's going to be very influential over price action. Well, now you can incorporate this in your analysis as well. And this is a very powerful model when you have that combination of a breaker and a fair value gap. Because what you're doing is you're putting together the strongest tools in price action. A run on liquidity, a displacement away from that liquidity with a gap that smart money will be selling into. And it also overlaps with that breaker where they're going to also be selling into. So you have a lot of levels here that's going to act as a barrier on price and prevent it. So that would be the model right there. Run through the high, right? Or sweep the high, break down, shift market structure, breaker, fair value gap, tight risk, low risk, high reward, and look for the run into the levels that we talked about here. And then we talked about that settlement price here. Very nice setup here. Big Frank, thanks for the live stream. Glad you kept your promise when I asked you last year to stream more in 26. Yeah, absolutely. Like I said, I'll definitely be doing more with you guys. But like I tell you guys, I'm a trader first, streamer second. So I'm trading, making my bank, and then once I get what I'm looking for, then I'm more than happy to come out here and hang out and share the love. High Speed, my man, good to see you. There was also an IFBG in that same area. Lovely. What time frame? I know you get down to those lower time frames to find those IFBGs. What are we looking for? 30 second, 15? No, you know what? There is a small one here as well. Yeah, I got you. This one here, the 1 minute gap. John? Yeah, absolutely, brother. Good questions. And as you continue to go through the mentorship content and you start getting into month 2 especially, this will all become very clear. Breaker blocks, what's happening inside a breaker, how it was an order block that then failed, and how they're going to use that to initially long, but then they're going to sell inside that same range. So you'll learn all that good stuff, and that'll become crystal clear here with time. Nice, man. Awesome. And, one thing, high speed on top of that, whenever you have a breaker block, right, this is what a key market structure point. Any fair value gap that you have within a key market structure point like this, extend that through because it'll be important. So if I ever have a fair value gap that's inside of a breaker and it's nested like that, I know this fair value gap here is going to be very key and influential on price action. So if you guys didn't use the breaker and use like the IFBG, then beautiful. Use of that level here. Once, twice, hits it, and then sinks here. And it's because it's within that key market structure here. So a lot of details in price action. It's just a matter of how you want to look at it and what makes the most sense to you. So that's awesome. A lot of different ways to make money, right? Maybe just the fair value gap makes sense to you. Great, right? Maybe the breaker works. Maybe the inversion fair value gap. They all make money. The key is you have to know what you're doing. And again, that comes down to drawing liquidity. But before the drawing liquidity, before you get any low resistance liquidity run in price action, it has to take opposing liquidity first. So every time you're going to see a low resistance liquidity run like this, there will always be some measure of stops taken. And that's how you can start predicting this here. Love it. Awesome. And almost down to that settlement price here. Just a few points away. Stops taken off the 15-minute chart. All right. And then there they've delivered that settlement price there. So that's a full closure. Full closure of the opening range gap here. And then we talked about what gave us the insight that they would want to close that gap all the way. And like I said, you got to study how they traded each level, right? So the upper quadrant, we close below it, resistance repels lower. 50% of the gap here. You see we drop, trade through it, runs back into it, body stop, breaks away from it, telling you it's weak. Lower quadrant here, we get above it, break back down below it, close below it, trade up into it, hit it here on this candle, repel lower, and then we get a full closure there. I heard some people say that, I don't know who this gentleman is, but he said streamers that just get on and stream for an hour, it's because they have to leave to their day job after. So I guess I got to go leave to my day job here in a few minutes, guys. I think what it really is it's a hard cope, right? Because for us, what we do for our style of trading, we don't need to be on the charts all day, right? But as retail traders that don't really know what they're doing, they don't know when their setup's going to form, right? So they have to sit there from open to close, like I used to. When I first started, I was on there from 8:30, 9:30, all the way to the close, baby. Why? Because, man, I don't know when my setup's going to form, so I don't want to get away from my desk because I don't want to miss my trade setup, right? So I think traders that think they need to be on there all day to trade profitably, it's just because they don't really know what they're doing. They don't know time. They don't know that specific things happen at certain times and that you can be very efficient with your trading. I mean, 60 minutes a day, you can carve out all the income you would ever need just working in that 9:30 to 10:30 range. Why do you like 9:30 to 10:30, Dylan? Because it gives these types of price runs here. This is what I want to trade, right? I don't want to trade any of this. I'm not trying to gamble in this and fuck around in consolidation. This is a waste of my time here. I want to trade stuff like this where it's obvious run on liquidity, clear breakdown, obvious order flow, relatively equal lows, closing the opening range gap. Then we also got into the end dog there, so the new day opening gap here, and then the sell stops here. So when you know what you're looking for, you don't need to be on the charts all day. You can be very efficient with your time, and you can still run businesses, day job, university, whatever you may be doing with trading, and you can do very, very well with it. And just having a very streamlined approach here. The initial sweep should be seen on a 15-minute chart. Yeah, so yeah, I see where you're getting that from, John. So in the content and when I'm starting someone off that I'm working with, right? The reason why I take so much attention to that 15-minute chart, especially when you're starting, is because if you look at the 15-minute chart, you're going to see just about every single day, it's going to run to those liquidity pools on the 15-minute chart. So right away for a new student, someone that's just starting to work with me, they're just starting to grow into smart money concepts, you want to see something that repeats every single day. The algorithm at 9:30, repricing for liquidity on the 15-minute chart will be there every single day, even on the trashiest days like this. So the 15-minute chart, the reason it's so key is because it's going to give you all the intraday stops. The futures market is a trader's market, right? There's a lot of people trading NASDAQ, S&P, Dow. No, who likes to trade the Dow, but some do. So there's a lot of traders in these markets. So they're going to run the stops because it's a trader's market. So where are the stops going to be? Well, they're not going to hide it. It's not a mystery. Look at your 15-minute chart. And that's going to have all the intraday stops that you need to work with as a scalper and intraday trader. So that 15-minute chart is going to be, ICT calls it a bellwether chart. So it's going to be your bellwether chart that you're going to use to frame your price runs, your setups, and what you're looking for. So as a scalper, I use a 15-minute chart like a higher time frame chart. What does that mean? Well, let's say, forget it's a 15-minute chart. Pretend this is the daily chart. What's my bias here after we take the high and we break down? My daily bias is bearish here. So now I can just drop into a 1-minute chart in my lower time frame and just absolutely carve this market up with that insight. So the 15-minute chart is like your anchor. It's the higher time frame. And every single day that one, let me not say, 80 to 90% of the days you will see that one setup for life forming. 9:30 will run some measure of liquidity, and then it'll run for the opposite liquidity. So that's why that 15-minute chart is so key. You can still reach the same conclusion on a 5 or even a 1-minute chart, but in my opinion, it's just really easy to see it on the 15-minute chart. And then it also starts to train you as a developing student to look at higher time frames. Because most traders, when they're starting, their charts look like this. And they're trading on a 1-minute chart like this. And they just have no clue what the draw is, what they're looking for, because they're not able to zoom out, right? So as you get accustomed to looking at these higher time frames and looking top down, it'll give you that clarity that you're looking for. Because if you're looking at charts like this and you're just looking for like patterns, it's not going to work for you, because you're going to see a lot of inversion fair value gaps. You're going to see a lot of breakers, a lot of order blocks, and a lot of traditional fair value gaps, but not all of them work. The ones that work have specific components behind it. Number one being time, and then the other one being, has there been some measure manipulation to take retail out or put them on the wrong side of the market? And then there has to be obvious opposing liquidity for it to reach for. And that's the last criteria for a high probability trade setup. Ortiz, great to see you live. Yeah, glad to be here, guys. Samad, thank you. Yeah, glad to be here, brother. Leave a like on the stream. Yeah, absolutely. If you guys learned something today, helped you guys out, be sure to leave the stream a like on your way out. I would appreciate that. Getting last drop of yerba mate here. What makes it one setup for life is they took out buy side first, even before the open. Bell still can be considered. Yeah, absolutely. Because you'll see they took it out here at 928. That's a shallow run though. At 930, they did another deeper run into that. So you want to think, what's happening here, right? When it's trading above this high, and this is a bold bullish candle. Let me show you what it looks like here on market replay. Right. So you got to think at this point here at 930, what's just happened? Casino's open, right? Retail Rick is scared he's going to miss the move, and he's trying to do something in a rush and in a hurry with not a lot of knowledge. So when you see a big, bold blue candle like this, and forget smart money concepts, forget what we understand that yes, there's equal lows here, so why the hell would you go long here if there's equal lows, right? I get it. We're framing the retail point of view. Because the reason this works is because retail's on the wrong side, losing their ass on these low resistance liquidity runs. So you have to understand how they're thinking, right? If you're a lion, you got to understand how the gazelle thinks so you can run it down and eat it, right? The same thing in the market. So we're running these down. We're running them down. But you got to understand how they're going to set them up first. So when this is a big, bold blue candle here above this high, what's retail thinking? Okay, well, I just read this book. We ran away from this high here, right? It was strong resistance, so a lot of demand came into the market here. Or no, would it be supply or demand? Fuck. I don't even have it straight. No, supply. Yeah. So supply overtook demand here. And look at push the market lower. So this is a very key level. So if we can push above this level here, this strong resistance, then that would be very bullish. In the retail perspective, unprofitable trader point of view. So now they're here, peak euphoria. I got to get into this market. I got to go long because I'm going to miss the next trade. So now they're long here, buying a breakout. Where's their stop loss going to go? Well, they just saw here. Now we have what? We have a demand zone here because it hit it once, it hit it twice. Now we got a lot of demand here, right? And also it's a double bottom. So we have support. Hit it once, hit it twice. So just like the books. So, man, it's really easy. Man, read this book. Whew, man. Double bottom, support, rally. Great. So when you have now that, and then you have what we're looking for, which is, okay, one setup for life. They run buy side, put retail Rick in long, and then it breaks down and shifts market structure and creates a fair value gap. Who's going to win that match? Retail Rick, who just picked up his book this weekend, or Smart Money Concepts, who's actively going to attack the weaker-minded trader, right? So it's very important to understand the narrative aspect and what's happening there and what makes the one setup for life work. Because it's not just like the pattern of, oh, we open, you want to see it run higher, then run lower. That's a component of it if you really want to simplify it, yes. But you want to understand really what's going on there, because that's really what makes it effective. For you to be profitable on a trade, someone has to be losing their ass. And this is how you make sure you're on the winning side. So hopefully that makes sense. Same setup just occurred on Euro. I'm up 10 pips. Happy me. Okay. Let me see euro. I'm looking at the dollar here. Let me pull up euro. I usually just look at the dollar. It tells me everything I need to know about the euro. Hey, how about those metals, huh? Remember I told you guys a few weeks ago. Don't be surprised when you see silver in the hundreds. It'll get there. It'll get there. No worries. Euro. So the bias bearish on euro. Same thing, yeah. In terms of the buy side, the sell side in the euro. Yeah. So all these markets operate on liquidity, right? So I know a lot of you guys see the model in me teaching through index futures. But if you understand time of day and liquidity, you can go into any market and rip it apart. But again, it comes down to you have to like really know what you're doing. And then you can see they run it up, buy stops, and all these equal lows here. So you can see that liquidity aspect working in every market. All right, so we closed in the gap here. That would be it for me today. Like if I was trading and I had any runners, like I said, I would have, because of the day, admittedly, I would have like 80% of the trade off here. If I had anything going, it would definitely be all off at that settlement price here. But we rallied higher, broke down, created a fair value gap here. And then through that fair value gap, we have that settlement price here. So we traded higher, rallied, hit that gap with the settlement price. And now we're selling off into selling off into the lows. All right, let's go over to ES here real quick. All right, so for S&P, I want to see it dig down into this low here further. So frame that sell side liquidity here. So you see on the hourly chart here for S&P, we have these equal lows here. I want to see this thing really dig through that low. See if it can dig deeper down into it. Sorry, guys. Yep, that's going to complete my day here. So ES resets sell side as well. We're going on about 10:30. So 10:30 usually pulls the plug for me, especially when we have a nice opening range that first 30 minutes. That's really all you need to do very well. So with that being said, guys, that's going to be it here for me today. Hope you guys learned something. Hope you took something away from this, and appreciate all you guys' good questions here. Any questions for me here before we get going into the weekend and I head out to the gym? What confirmed for you that it's weak to trust selling this fair value gap? Are you talking about the first presented gap here? Yeah. Oh, because it's the first fair value gap. It's the first fair value gap after a liquidity run when there's equal lows. That is just a dead bringer right there, whenever you have that. Obvious strong liquidity, it's the right time of day, and it's the first fair value gap. That's a loaded deal. Thanks so much for today's lesson. Yeah, glad to be here, brother. Absolutely. What are your targets you're looking for right now? All my targets have been delivered. So once targets are delivered, I'm comfortable with that and let the next price run unfold. Usually, once you get a good price run, usually takes a little while for that next clean, obvious price run to form. So as of right now, I shared my cards, what I'm looking for, that delivered. So that usually puts me in a place of being content with enough, moving to the sidelines, and letting the market do its thing. So that's kind of where I'm at right now. So yeah, those are my targets. Took many notes. Thanks, Dylan. Pleasure. Glad to be here with you guys. Caleb, Dylan's the coach. Appreciate you guys. Thank you. Appreciate it, man. Take care. Absolutely. Yeah. Good being here with you guys. Have an amazing weekend, guys. Stay safe. I will see you guys on Sunday, and we'll be back to do it all over again next week, guys. Take care. Stay safe. I will see you guys on the next one. Have an amazing weekend, everybody. Bye, guys.